Over $1.2 trillion vanished from the crypto market in just 6 weeks. Bitcoin has crashed nearly 35% since October peak. US stocks saw a $2.7 trillion wipe out in a single day last week. And investors everywhere are asking the same question: what on earth is going on? Let's break it down. Bitcoin, the poster child of digital assets, breached the $81,000 level by the end of last week, its lowest level since April. To put that in perspective, on October 6th, Bitcoin hit a record $126,272 and crypto market cap was valued over $4 trillion. Today, that rally is a memory. Crypto market by Friday was below $2.7 trillion. So what broke? Something shifted on October 10 when US President Donald Trump threatened 100% tariff on China. The impact was immediate. A record $19.2 billion liquidation hit the crypto markets, and Bitcoin never really recovered. Even after October 30 US-China trade deal, liquidation pressures deepened. And since November 10, Bitcoin has moved in a straight line downward, with average daily liquidations near $1 billion. And big institutional investors are pulling out money at scale. BlackRock $1 billion, Grayscale $172 million, Fidelity $116 million. Meanwhile, leveraged products magnified the fall, borrowed trades collapsed, margin calls kicked in, and forced liquidations dragged the prices even lower. The fear didn't stop at crypto. Wall Street had a turbulent week. On Thursday alone, nearly $2.7 trillion was wiped off US equities. Why? Because the market is terrified of a possible AI bubble. Google CEO Sundar Pichai warned of irrationality in the AI boom, adding that no company will be spared if it bursts. JP Morgan Vice Chairman Daniel Pinto echoed that particular warning. There's probably a correction coming, and that correction, he said, can hit the S&P 500 and the broader industry. Klarna CEO also raised a red flag. The massive money pouring into computing infrastructure is making him nervous. Bank of America's survey shows 45% of fund managers now believe the AI bubble is the biggest tail risk in markets. Even gold, traditionally the safe haven, has fallen. And lurking underneath all this, Fed Governor Lee Sukuk flagged risks in the private credit market. Analysts warned that hopes for a December rate cut had faded. Strong jobs data and tighter macro risks are pushing markets into correction mode. So why the rebound on Friday? Because there was one voice that calmed the storm. New York Fed President John Williams, a voting member of the FOMC, said the Fed can still cut rates in the near term without derailing its inflation goals. That single line shifted sentiment. US stocks bounced back, crypto steadied, Bitcoin recovered some lost ground. But the uncertainty remains. The fear of an AI bubble, the risk of more liquidations, the ongoing US-China volatility, and a divided Federal Reserve. All these continue to haunt investors. This rebound may not be a relief, it may simply be the eye of the storm.